What's going on, everyone? Welcome to the channel. Today should be a relatively shorter video. We're going to go over what I think might happen on the indices soon. We're going to go over a few trades that we made, as well as just go over the broad market. So yeah, without further ado, let's go over crude oil. So crude oil yesterday, it broke above its downward momentum, which was really good for equities and the indices, right? So today we see a clean back test of this level right here on the wick, but we ended up still closing closer to it. So that isn't necessarily a very good sign. Okay. A few other things that I want to go over. All right. So the U.S. 10-year yield, right? This morning it was very bullish. We were retesting this level of resistance, this upward momentum, right? We retested it and we failed it and we broke. So now we're back to where we were at yesterday's close, essentially. So this is actually very bullish for the tech sector. The fact that the U.S. 10-year yield couldn't break above. So let's see if we get some sort of a rally into the tech sector soon, especially because it's the end of the month, right? So rebalancing usually occurs at the end of the month into the beginning of the new month, meaning that all of the stocks that were huge winners, right? I'm not talking about the yield now. I'm talking about just stocks in general. So all of the stocks that were huge winners, for example, the IWM, right? I feel like the IWM or stocks that have just been doing very well this month, right? They take a dip and all of that money from the hedge funds will go into stocks that were down. Okay, so in my opinion, based off of the bonds rallying and um, the yield not looking as bullish as it could be, and the fact that the Nasdaq is still holding support, right? It might look very good for the Qs and the Nasdaq sector heading into the new month, given that this entire month, it really hasn't been doing much and we've been lagging behind. Whereas the IWM, it did well into the beginning of the month, and it started to fall afterward as the rest of the sector fell. So I think personally that the Nasdaq, if it holds this level of support, can do much better. But again, it all depends on the levels, right? So the QQQ, we held this level 310.90 very well. We closed above the 38.2% Fibonacci level at 314.10, which is another bullish sign. But now we need to cross above the 10 simple moving average as well as 318.64, right? The golden number that we want to reach is 324. So we need to see how we respond around these levels here. It's very simple at this point. It's just there's not really, you can't really, it's tough to guess which way the market is going to go. So that's why we just have to plainly just trade the levels. All right. So you could have went long against, the 50% Fibonacci level at 310.90. So you had an entry point. At the low today was 311.54, right? So you could have had an entry point at 312 with a stop loss below 310.90. So that's $1.10, right? You could have even brought the stop loss to $1.25, right? But then your upward target could have been 318. So there's many different ways to trade. There's many different strategies that you can do. But the main thing you guys need to understand is that these are the levels. To make these levels, you create a Fibonacci retracement. So you click this right here, okay? Click this tab on tradingview.com. Click Fib retracement. All right, let me do it for you guys. So for the shorter term, right? So you click this, click Fibonacci retracement, and you literally just drag it from here all the way to the top. Okay, so you take the swing low to the swing high, and this is exactly how you get the levels. Okay, so it's very simple. I would really recommend everyone do that on your charts. You'd have a very easy understanding of where the support and resistance levels are. And yeah, so go ahead and do that. The IWM, I said that 310, no, I said 218.60 was an important level, right? So we ended up going to 218.68, and then I posted on Twitter that I was going short the IWM at that level. I ended up getting a fill at 218.53, and I had a stop loss at 219.20. All right, so that was a pretty good trade. The IWM obviously collapsed soon thereafter, and it was a pretty amazing trade actually. We got a really nice gain into the close. I ended up taking a lot of profits, and then after I took profits, the Nasdaq or the IWM closed in a very bullish way. So I was like, okay, like I'm glad that I took a lot of my profits. But yeah, I'm not holding anything overnight. The main thing is that the IWM looks very, very bullish currently into the close. The Nasdaq looks freaking amazing into the close, which is a very, very bullish sign. Okay, um, so I personally think that the Nasdaq is going to get the most rebalancing into it, as you can see from that chart. So yeah, the Nasdaq and the SPY look pretty amazing. So let's look at the SPY on a daily chart as well. Okay. So if the Nasdaq can help lift up the SPY, this can potentially break into new highs. Okay, but it all depends on these levels. 392 needs to sustain itself, and like I was saying yesterday, we need to consolidate a bit and hold these levels of support enough so that we can go back up higher. Okay, so currently that's what happened today. If we look at it on a daily chart, we consolidated a bit. We didn't go much lower. We made a higher low, but we also didn't crack up above. So this is just consolidation and choppy movement. So that's why trading the levels is very important. Obviously, the SPY didn't give as clean of entry and exit points as the NASDAQ and the IWM did, but they're all worth looking at. So now the other thing that I want to show you guys is the dollar. The dollar had a very bullish move today. It made new highs, obviously, and this is not good for equities either. So there is a mixture of things that are very, very bad for equities going on right now, right? But we see the equities in the stock market just acting mostly bullish to this news, right? If the correlation was still as strong as it was for the U.S. 10-year yield and the Nasdaq as it was back here, then the Nasdaq, oh my God, this this move up here would have brought the Nasdaq down here, but that's not what happened. So it looks the equities market currently, because we're rebalancing and it's the end of the month and it's also the beginning of the new quarter. Okay, so you have to understand that funds are going to want to take money out of the winners and put it into the losers. And currently, the loser has been the NASDAQ because it's been such an amazing time for the US 10-year yield. Okay, so again, I really feel like the NASDAQ is going to, if something is going to lift the SPY into new all-time highs, it's going to be the NASDAQ and the FANG stocks. Okay, so that's currently what's happening. Crude oil taking this retracement back to support is also a pretty bullish sign if you want to look at it like that. But this trend line needs to hold, and hopefully, we can bounce back above. Bitcoin has not really acted in correlation to the dollar. So what I've realized with Bitcoin is that when Bitcoin is weak, the correlation to the overall equities market is much stronger. But when Bitcoin is strong, the correlation to the dollar and the equities market does not persist as strongly. So currently, back when Bitcoin was weak and the equities market was weak, we keyed off of Bitcoin being strong as a good indicator of why the IWM would also be strong. So that worked out. But now Bitcoin is outperforming everything like it usually does. So that's an amazing time for that. But aside from that, the IWM, the levels that you guys need to understand are as follows: 207.21, 213.06, 217.65, 220.87, 224.09, 228. Okay, so you can literally, if we touch a level at the bottom side, you can buy calls or you can buy something here, right? You could buy the IWM here and have a tight stop right below it, so you could trade it to the upside. If it touches one of these resistance points, you can do the same thing on the downside. So right now, it's just literally a very choppy market. It's not really giving good buy signals for swings. It's much harder to swing trade currently in this market unless you're trading extremes. So one thing that I want to show you is an extreme that we were looking at. So silver, thankfully, the June 30 calls that I alerted for silver are only down, I think, 10%, 10, 50. It's not a lot. And then the April 16 calls are down 3%. So one of the reasons why I wanted to long silver at these levels is because we're below the lower band of the standard deviation. So when we are below the lower band of the standard deviation on the Bollinger Bands, okay, it's a very interesting buy signal because funds and hedge funds, they algorithmically look for setups like this for a potential return to the mean trade, right? So this 20 exponential moving average is the middle of these two standard deviation lines. So funds, they look for extreme cases. For example, when silver broke above this, upper level of standard deviation, they bought puts. When it, fell below the lower level of standard deviation, you bought calls, right? So it doesn't work as cleanly on silver, right? But it works perfectly for me on the three major indices, the SPY, the QQQ, and the IWM. Whenever this is going to last you forever, in my opinion. I've never, ever had a losing trade doing this. So whenever the SPY is trading above, whenever these three indices are trading above or below the standard deviation levels, if you buy puts for 3 months out or you buy calls for 3 months out, they have 100% always worked for me. So it doesn't work as cleanly on actual stocks, and it doesn't work as cleanly on, manipulated garbage like silver. But that's one of the reasons why I got into silver. We're at an extreme, so it's worth taking a shot. I'd much rather buy silver when it's beaten down, destroyed, than when it looks great. Because when it looks great, we understand that silver and gold and these precious metal markets are extremely manipulated. So you buy when people are afraid, and you sell when people are greedy. So that's what we're doing on silver. That's my analysis for the overall market. We just have to trade the levels into the new month. Let's see how the Nasdaq responds. The Nasdaq should be the should be the sector. The tech sector should be the sector that funds funnel their money into. If we look at Apple, Apple is still above this level of support. Let's look at Amazon. Amazon is below this level of resistance. Microsoft had a very red day today. Google had a red day today as well. Facebook had a red day today as well. Okay, so if these kick their butts in gear, so now imagine Apple starts actually moving upward in a bullish way, right? The fact that the Nasdaq still held when all of the FANG stocks had a relatively mediocre day is a pretty good sign. So let's see if these levels hold. And I hope you guys enjoyed the video. So yeah, thank you so much.